Welcome to Electrified. It's your host, Dylan Loomis. Quick shout out to my newest patron, Jim S. Thank you for choosing to support the channel. I'm sure most of you have been exposed to this news by now, so I really just want to talk about the fallout. Why does Tesla post a record quarter and then the stock goes down 7%? Well, there's a lot more going on than meets the eye. The question is being asked, do Tesla investors now need to adjust to a new paradigm? Because as Tesla matures, now they have many more issues that are finally catching up to them. First, we have to talk about the inventory narratives. I think some people are slightly alarmed seeing the total inventory number now at 88,000. The thing with inventory though, you need to look at it through a relative lens, and in this case, it's all relative to production. Here's that chart that James Cat shared showing us the total inventory number in the red. This is by quarter. And the gray line is going to be the days of inventory. You may also see this referred to as DIO, or days of inventory outstanding. In my opinion, the real number to focus on is the days of inventory outstanding, because it's simple. As Tesla grows, their logistical challenges will continually increase. From a very simple standpoint, there was a time in the past when Tesla produced about 5,000 cars in that last week of a quarter. Fast forward to today, and that number is closer to 35,000. So what's harder to deliver in that week before the quarter ends? 5,000 or 35,000? And in the future, as that number hits 100,000 plus, you get the picture. To further prove that point, some people are concerned about the Model S and X deliveries relative to the production number. Doing the math, Tesla only delivered about 55% of the Model S and X vehicles it produced in the quarter. The way I see it, there's a very simple explanation. Tesla started exporting the Model S and X to China and Europe again throughout the quarter. This is something they really haven't done for the past 2 years. Meaning, over the past 2 years, Tesla has been producing the S and X in Fremont and then actually delivering them in the United States. But now they have to deliver those same vehicles that are only made in Fremont globally, so there's going to be a transit time involved. For some context on the days of inventory outstanding number, yes, most legacy OEMs have numbers anywhere between 30 and 60 compared to Tesla's, even after this most recent quarter sitting around 16. Thus, it is a true statement that even if Tesla's days of inventory outstanding were to double in the quarters ahead, it would still be below most of the legacy OEMs. However, what is that actually good for? Hopefully this will help to clarify some of the Tesla stock move. Tesla is of course a growth company, but what that means is they already have a lot of future growth already baked into the present day valuation. So if you look at it from a PE standpoint, the GAAP PE for Tesla is 54 and the non-GAAP is 48. I would argue most of Wall Street focuses more on the forward PE. So for 2023, it sits around 49, and for 2024, it sits around 35. To compare these latter numbers to legacy automotive, who have PE ratios anywhere between 3 and 10, you can see that Tesla is already valued at a higher multiple than the competition. So I'm not arguing this next point. I'm just saying what Wall Street is thinking is that right now Tesla has a 6 to 7 times multiple relative to legacy OEMs. So at the end of the day, they shouldn't be held to the same standard, especially when it comes to metrics like days of inventory outstanding. Tesla's should be better because they have a higher multiple. With that said, the way I see it, we never should have expected Tesla to keep a days of inventory outstanding below 10, because ultimately it's just not sustainable, especially as things in the macro change. I bring up the macro point because I'm not trying to defend this entire increase. I'm sure some of this is absolutely driven by softer demand, people waiting to see what's going on with the IRA credits. Interest rates are still making new car purchases prohibitive for a ton of people. And sure, at least to some degree, there is more and more competition. So as I've been saying, we all should be expecting a season where it's a little bit harder for Tesla to sell its vehicles, especially at premium price points with everything going on with the economy. However, as you guys know, I always say when in doubt, just zoom out. And we have Rob tweeting out Tesla's historical Q1 deliveries. So take a quick look, internalize that for a second. And then JPR actually translated those numbers into compound annual growth rates. So you can see from 2014 to 2020, Tesla's CAGR has actually been increasing when it comes to first quarter delivery numbers. Yes, I did check those numbers. If you ever want to do the same, you can just go to kagercalculator.net. Makes it super easy. This is why zooming out is a beautiful thing. And if you say, well, what about 2021 and 22? Tesla's growing less than 50%. Well, sure, but again, these years prior actually give Tesla a little bit of leeway because ultimately it's all supposed to average out to 50% per year over time, meaning 5, 10, 15 years. While we're on the topic, in case you're not on Twitter, have a look at this chart from the man James Stevenson. Pretty simple, Tesla's trailing 12-month global deliveries. Zooming out, things seem to be well on track, right on pace of the S-curve, just like we all want to see. If we look at Tesla's Q4 numbers and do some math, their inventory addition was actually about 34.4 thousand. Dividing that by the production number works out to about 7.8% of vehicles Tesla added to inventory in quarter 4. Doing that exact same math for quarter 1, it works out to about 17.9 thousand vehicles added to inventory. Divided by the production number is only about 4%. So now everybody seems to be worried about this when in quarter 4 it wasn't nearly as big of a talking point. When in reality, in quarter 4, the number of units added to inventory relative to production was actually a bit higher. So why is Tesla stock getting beat up? Well, ultimately, who really knows? A couple of things I would add. Don't forget on Friday, it ran up about 6% ahead of this report. I think some people started to think that Tesla was going to crush expectations when in reality, they essentially just met them. However, in my opinion, the real reason is because now everybody's going to be waiting to see the gross margin numbers on April 19th. It's pretty simple. Some analysts just thought Tesla's up to 20% price cuts should have led to more vehicles delivered. But again, there's way more at play. But from that framework, they then just think, well, further price cuts are going to be needed in order for Tesla to hit their volumes, and obviously only time will tell. It is also true that quarter 1 is usually the slowest quarter for auto sales of the year. Either way, you can argue until you are blue in the face about Tesla's inventory, what levels it should be at, how it should impact the PE valuation going forward. Again, as I always say, in the long run, it doesn't really matter that much. It's this type of thing that does matter. Growth rates will fluctuate given the macro situation, margins will fluctuate given the same, and when you layer in Tesla's cost declines and input costs, those rising and falling, it's all always going to change. So like I've been saying, we should be expecting lower growth rates and lower margins, but there's going to be a season in the future when we go back to higher margins and higher growth rates, especially when the next-gen platform comes online. Looking at some Chinese automaker sales for Q1 this year compared to Q4, you'll note there's only 3 companies on this list that were positive: Tesla, Li Auto, and a company called Denza, who of course is a much smaller company. Look at the other numbers comparing quarter over quarter. -8 for BYD, -20 for NIO, -20 for XPeng, and -52% for Zeekr. Speaking of BYD, this video will be linked below. It really is just touching on the BYD quality or lack thereof, some fires that are of course being suppressed by the media, as well as some other reliability concerns for companies like BYD that to some degree may just be rushing out volume to the market, lacking some quality control. My simple takeaway, the quarter was good. Could it have been better? Sure. Was it bad? No. And from a long-term standpoint, it really doesn't matter either way. Moving on, let's just take a quick second to admire a Model X in the new Ultra Red. I'd imagine most of you have already seen this by now, but in case you haven't, we did get some new footage of the Cybertruck spotted at Fremont on the test track. The full video will be linked below. Perspective is always a challenge, but in this clip, you can see the Cybertruck pull up alongside a Model Y to get a rough estimate of how big it will be. Can we just talk about the size of the dashboard? It's pretty big. Here is one more quick angle, again, just to try to give you some level of perspective. And here's one last quick clip from that video. And just real quick, for those not on Twitter, we did get a fake Tesla Cybertruck crash test. Fake in the sense that they never actually showed the clip of it hitting the wall. Hopefully we get that in the weeks and months ahead. This was somewhat of an April Fool's joke, but you can learn a few new things from the video. Speaking of learning new things, Jordan and Corey from Monroe Live break it down. It is pretty technical though, so I'll just put a link below. Over the weekend, Elon did say walk the whole Cybertruck production line at Giga Texas for several hours earlier today. Gonna be awesome. He then added, feels like the future. There's also a new video tour from Alex Vessi that will also be linked below. It's just some cool footage of the factory if you want to check it out. Don't forget, when it comes to subtitles, you can just click CC, and if it's not in a language you want, click the gear, go to subtitles, and then actually choose auto translate, and then you can choose the actual language that you want. Speaking of Giga Berlin, RBB just reported today that they're apparently hiring for a 4th shift at Giga Berlin, which would allow for work on Saturdays as well, up from the 3 shifts they're operating with currently. As we expected would be coming, Giga Texas has hit the 4,000 Model Ys produced in 1 week mark. Looking at the timeline for the Giga Texas ramp, we have 17 weeks to hit the first 1,000 Model Ys made from first deliveries. Then from that, we have another 6 weeks to get to 2,000, then 10 weeks to get to 3,000, and then 15 weeks for Tesla to go from 3 to 4,000 at Giga Austin. When you look at these jumps in terms of timelines for each increase of 1,000 units, when you compare that to Giga Berlin, it's definitely much slower. Here is Giga Berlin, and starting from 2K a week, we see 11, 8, and then down to 4. Either way, progress is progress. Now Giga Austin's at a run rate of about 200,000 per year. And remember, they're also dealing with the Cybertruck and 4680s and structural packs. So simply put, they're spread more thin in Austin than they are Berlin. In line with Tesla now exporting Model S and X vehicles globally, Tesla Korea has said that it will deliver Model S and X vehicles from June of this year. As we heard, the beginning of April was set to open new orders. Don't forget, with Model S and X, the Inflation Reduction Act has made the 3 and Y look even better relative to those vehicles. And with Hardware 4, there's been a lot of confusion that Tesla hasn't given any clarity for, so just a lot going on. Tesla did announce this new product unveil. It's this Cybervault, essentially for a mobile charger that you can disconnect and take with you. That's in the housing of something looking like a Cybertruck. Honestly, a bit of a letdown given how they were hyping it up, but could be a good product fit for that market where maybe more people live in apartments, need something that's waterproof. This does seem to have a combination lock, so it sounds like it can lock. To those of you that were here last week and played the game and actually won the game, just know I'll be in touch via email over the next few days with your prize. Maybe the Chinese market eventually just gets a cyber compact car. That could certainly be it. And this device with charger and all is expected to cost around $800. That apparently does include installation. In Q1, Rivian produced 9,395 vehicles and delivered 7,946 of those, confirmed it was on track to deliver 50,000 units this year, will announce financial results on May 9th. Same situation here, whether Rivian beat or missed depends at which outlet you're looking at, but ultimately production was essentially in line with expectations and deliveries were slightly ahead of at least where Bloomberg was at. We also got GM's first quarter results and they delivered 20,000 plus EVs. Of this 20,600 number, about 19,700 were the Chevy Bolt, roughly 900 were the Lyriq, and 2 were Hummers. Don't forget, GM was dealing with that recall with water getting into the battery pack, so production of the Hummer was shut down for most of the quarter. GM said it expects to build 50,000 EVs in the first half of this year in North America and then double that, so 100,000 in the second half of the year. Saw this on Reddit and I had to pass it along. You can find me on Twitter at DylanLoomis22. Hope you guys have a wonderful day. Please like the video if you did, and a huge thank you to all of my Patreon supporters.